It's the end of the month. How's your month been? Other than wet and cold. Dude, I was so freaking freezing yesterday. It's crazy. I was cold like all day. Okay, so you also saw, if you saw my videos or saw my photos, it was Lexi. Nikki, in case you're watching, it was Lexi. Okay. Lexi got her license yesterday. We went down to Gilroy and we went down to Fifth Street Coffee and had some coffee and got there early. And, she did her test and she's a great driver. She's an amazing driver, for being 16, right? She's doing great. So congratulations, baby. I'm proud of you. Angie, you're next. All right. Lots to talk about. 3 things to know. 3 things you need to know about real estate. We do all the research so you don't have to. That's awesome, right? You don't have to worry about what's going on in real estate because you can just see Vito talk about this and chop in for 15, 20 minutes. You can listen to it on a podcast if you don't want to look at my face. Here we go. And by the way, I don't know if you could tell, but I feel 1,000 times better than yesterday and the day before. Over the last 5-6 days, my neck had gotten these cricks in them. And I thought it was viral. I don't know what it was. It was just something that just wouldn't go away. And Joel had to go up to see my son for a couple days. And I was doing all the daddy daycare, driving around stuff because Lexi hadn't got her license yet. I was like, I did nothing for 5 days. I did some, little things here and there. I did the videos, etc. But I had zero tolerance for anything because I was in so much pain. And yesterday I got to the gym. We actually did some back exercises. And all of a sudden, it was just like everything just opened up. And I felt so much better. And today, this morning, I woke up and I cracked my neck on accident. And I haven't been able to do that in a long time. So just so glorious and so amazed. And anyway, enough of that. Today, we're talking about banking crisis and how the Fed helped out and how that's going to hurt us. We're going to talk about realtors fleeing the business. And we're talking about rent growth is going to start continuing to grow slow. All right, let's get into it. And also we're talking about the 40 days on market numbers. So let's get into it. Let's see how I do this. There we go. I'm playing with this thing. By the way, this melon is a whole, once you get the gist of it, it's like going from PC to Mac. It's just so much easier. It just, I don't know how else to explain it. So melonapp.com. There's something in my in my signature down there below if you want to give it a try. I'm telling you, this is amazing stuff. All right, let's take a look real quick. I have to get over here to this monitor. I didn't check the let me see if I can find that real quick. Yeah, while we're talking, March 29th, real quick, 165 days, 165 homes on market over 40 days. There's 93 homes on market over 90 days. If you look, these numbers are starting to shrink, right? We're seeing a trend downwards. That's great. That's good news. We had a slight influx of new REOs or bank-owned properties, which, we don't like to talk about, but we do. Again, it's not to freak people out because out of 10 counties, there's only 30 REOs or bank-owned properties. They're foreclosed. It's like the evil snidely whiplash that comes and takes the home from people. This is nothing compared to what it was, guys. So that's not an issue. This is what we're going to talk about. And look, inventory is just pathetically low. We're hoping that by this time this year, by the end of March, we would see this up to 400 or 500, maybe even 600, but we just don't see the inventory coming in because people are saying, you know what? I have my 2.5% interest. I'm not going anywhere. Or, this is just San Jose, right? What I'm hearing from Sacramento is all the people left the Silicon Valley, the Bay Area, and moved to Sacramento because their employers said, hey, you can work from home indefinitely. And now they're contracting that idea. They're taking that away. And now people are going, hey, you know what? I have to buy another house. So good for us, bad for them. They made a decision. They have to live with it. They're trying to sell their houses. Those house values are dropping a lot faster than here, but not. I mean, talk to Ryan Lundquist. You look at those numbers over there. They're not doing so bad, right? Because people are still moving. There's not enough inventory, right? Compared to tomorrow, we'll talk about inventory. Look at Cape Coral. Holy moly. Those are all empty nesters saying, I'm done. I don't want to deal with the hurricanes anymore. I'll tell you tomorrow why I'm deciding not to move to Florida. It has nothing to do with politics because I don't give a shit either way. I think they don't. Anyway, last year closes, we had 144 in 1 week. Just think about those poor escrow companies that had to just like run around with their head chopped off, closing all these deals. How much? This is last year. We're right at the peak of our market. I mean, the very, very, very top. April is where we kind of started plateauing. We didn't know it, but this is really where we kind of knew something was up. We knew that the firestorm had ended. There's still some smoldering embers everywhere. And we see that the market is slowing down, but it's still, we're in the spring rush. Right? And then April comes and we'll see that tomorrow, next week as well. We'll see it in the next coming weeks. So we're down 50% last week, year to date, year on year. And then overall, we're 55% down year on year. Last year's, our average list price is 115.33 or 1.533. Average sales price, which is 1.571, which is still crazy. Look at that. It's over list price on average. 42% or 42 out of the 70 sales were over list price. Where is it? Where's that number? Where's that number? Oh, right here. 42 again, right? I went to this. I looked. I think that's it. Oh, this is last year's. Revert that. Yeah, 70. And you see these numbers right here. Ratio closed by original place. Right here. 42. 42 homes sold over list price. All right, so that's 42. That's 60% of the houses sold right now. 60% of the houses right now are selling over list price in San Jose. Right. The high list price we saw yesterday is 132. The low is this guy right here. We can take a quick look at this one. Vito, what are you doing? There it is. Now, remember yesterday I kind of harped on pricing is imperative. This is a microcosm right here, right? This one was priced just a little too high, and it sat on market 45 days. And then they dropped the price down below $1 million, which is $200,000 less than what they expected. And buyers came in and said, this is what we're willing to pay. Right? Let's take a look real quick when I don't want to. So yeah, so originally it was on market for, so they dropped it down. December 15th, they listed it active 1.183. And then they did a list price adjustment to that after almost a month. And then it sat on market another month. And 5 days, 6 days, 7 days. So there you go. Okay, but see, when you price it under, the houses are going to sell. I know there's hubris, right? There's ego. My house was worth $2 million in April of 2022. That was April of 2022, and we don't have control of the market, right? The politicians don't have control of the market. It's the top 20 people that own this world that decide how this is going to work. So, without getting into conspiracy, days on market, it takes about 26 days to sell a house in San Jose versus last year it was 7. Right? On average is 28 days now, and on average is 12 back last year to date. We have 60 pendings. So we're still healthy. Look, we're still doing really, really well as far as getting into contract. Even with the housing market, the rates going higher, people are still wanting to buy houses at the same, not at the same rate as last year, but 50%. That's not bad. I mean, considering the fact that last year was an anomaly, we've had money way too low. 20%, 53% of the houses that are on market right now have decreased in price. 53 of the houses that are for sale right now, which is 264, or 20% of them are losing, which is actually a good number. Think about it. And then 11 TFT'd or got out of contract for whatever reason. And then we had 12 cancellations over the last 7 days. All right, let's talk about a couple things about the bank. Sorry. Silicon Valley Bank, Signature Bank, Deutsche Bank is next. There's a lot of people crying, Chicken Little, saying if that falls, take all your money out of the stock market right away. I'm not a financial advisor. Hey, Hector's on board. Hang on a second, Hector. Welcome, Heck.
Good morning. How we doing?
You can figure out your.
Can you hear me?
You figure out your.
My life.
Oh Lord! See, this is when 2 noobs come and do this.
What happened? Can you hear me? Okay.
There. This is what I'm gonna do. You there?
I'm here.
Can't hear you. Turn off your mute. So while he's figuring that out, let's talk about the banking crisis. I'm not a financial advisor. I can't give you financial advice. I would never give you financial advice other than the fact that we're talking about investing money into real estate here in a few days, in a few weeks. Nothing yet. That's why you get a PC, a Mac instead of a PC.
I have a Mac.
Still can't hear you. Yeah, I should be able to hear you, but oh wait. Can you hear me now?
I can hear you.
Can you hear me now? Maybe it is me.
I can hear
you.
you.
Hear me now? Oh, I can hear you now.
Yeah, I can hear you. I've been able to hear you the entire time.
Well, I know you can hear me because I'm talking, but it was me. I had it on the MacBook and the software was hooked to my microphone because my microphone has this little thing. Anyway.
Morning.
Heck, what's going on, Heck?
Not much. How are you?
Ed D. Good. How's
Just
business?
super busy. I wanted to jump on. Thanks for the heads up this morning, but I just want to at least jump on and say hello, answering maybe any questions. How I roll, man. We are fielding a ton of calls with this new program, obviously, that's been buzzing around real estate, the Cal HFA Dream for All, right? Like realtors, clients, lenders, everyone's kind of talking about this. And so it's made us extremely busy this week. It went live yesterday. And so anyway, that's kind of where I am. I'm going to be stepping away here in about 10 minutes. But yeah, I wanted to chat with you for a sec, see kind of what's going on in your world, you know, what you're talking about and see if I can add anything of value.
Today I'm just going through the 40 days on market thing, all the numbers with real estate, what's going on in San Jose, you know, but I was really just going to start harping on the Fed saving the banks and how that's going to hurt us with more inflation. And I know everybody understands that, but that's going to hurt us in the bank. It's going to hurt us in cash. It's going to hurt us in the stock market. But where it's not going to hurt us is if you buy, of course, real estate, but gold, metals, and all that other stuff too, right? I mean, that's where so I'm hearing lots of reports where gold is almost $2,000 an ounce now.
Wow. Anytime there's volatility in the markets, money's going to move, and it's going to go to safer havens, really, right? And so we're seeing, I mean, there's a tremendous, I'm not an advisor either when it comes to crypto, but I see Bitcoin's doing extremely well. You have a lot of, precious metals, money's moving around, right? And another area where that benefits us also on the mortgage side, right? We're dictated heavily by, treasuries and mortgage-backed securities, right? And so we've also been experiencing, since, let's say, a bunch of the stuff happening with banks, mortgage rates have gotten better, right? It's been a bit of a bumpy ride, but in the end, we're benefiting from it, right? So, and kind of to your point, right? Like one of the still safest places to be is real estate, right? So, really interesting kind of what's happening. I do feel the government it's kind of their place now to make sure that the consumer doesn't lose confidence in banks, and for them to step in and kind of neutralize the situation. So I think, at this point, especially with some of these, banks, it is important that they intervene. But, as you alluded, it does kind of kick the rock further down and continue to exacerbate, the situation that we do have.
What's really aggravating, and it's happening like 2008 again, right? It's almost like 1984, the dystopian story about our financial lives. In 2008, all the Fed government forced other banks to buy other banks, but there was massive bailouts, right? There's bailout money, too sweet, all over the place. It
From
only
2008, the cool fact, from 2008 to 2013, there was 414 banks that collapsed.
Wow.
In 2020, banks, right? In 2020, there was 4. From 2021 to 2023, there's been 2 so far. Huh. Right. So it just kind of puts things into perspective. I mean, I think
but don't you think that those numbers are going to go up?
Potentially. I mean, there seems to be some banks that are also experiencing some liquidity issues, what have you. I mean, I think there's a sharp contrast, especially in the real estate industry, to compare 08 to now, right? However, I think these are really big signs that we're in a recession, right? And that we're going to see some additional, recessionary indicators this year.
Are they calling it a recession though? They're like, we're entering a market, or a recessionary market, but we've been in a recession since April. You just don't want to call it that,
or even sooner than that, right? So last April, right? No, I agree, right? And it's just, I guess it's so technically, we have been in a recession, but not necessarily everyone's been affected in that way.
Yeah. So here's the thing, guys. If you're out there thinking if you should buy a house or not, I harp on this all the time, right? If you think about it and you're struggling to get a house, last week, Hector and I talked about the HFA loan, right? CalFHA, HFA, and that's 0 down payment. Now, there's some precarious issues that people are talking about, some issues that are negative about it, but if you're responsible, this could be a very, very good possible opportunity for you to become a homeowner. And now is the time to become a homeowner. Even if the market collapses, even if housing prices collapse, see what we do back in 2008 to 2012. Housing prices went down. People bought and bought and bought. If you buy now, in 10 years, it won't matter. It won't matter. I know you're like, oh, I want to catch the market, but if you don't have any money to enter the market, do the HFA now before it's too late. Because there's only $500 million.
300 million. So it's a It's a Senate bill that was passed, and when those funds are used, the program will be over. So unfortunately, I mean, this one has just a lot of buzz, right? I mean, it really has
Not
a
a
lot
lot
of
of down
benefits,
payments, right?
and it's going to help some people. It's going to help some people.
Yeah.
Like anything else, we do have to, plan accordingly, right? We need a mortgage plan with our clients. Affordability is still an issue with home prices and monthly payments. So it's important that we still make sure that we are appropriately qualifying people and obviously explaining, the ins and outs of the program, right? But absolutely, I think it will definitely help some people get into their first home.
Yep. So if you have any questions, I'll get you, just DM me and I'll introduce you to Hector and we can get you qualified as a first-time home buyer. My investor guru says luxury's dead, move up is dead, first-time home buyers is where it is right now. This is a great segue because we have a huge amount of people that are leaving the market. The real estate agents. And I don't know what it is for lenders, but I'm going to assume it's about the same percentage. Let me share this slide with you real quick, if I can. Show on stream. There. Can you see that?
Yep.
I'm going to try to make it so you can actually see it. Now, in 5 months, we had over 75,000 realtors leave the market.
Wow.
That's US based. That's entire United States, right? It's normal to see this type of thing happen when the market slows down. I mean, look at 2000. Where am I? Where's my cursor? That was 2012, 2008 right there. Look how many people left the market. We're not going anywhere, right? I mean, I know Hector's been around for 12 years, 11 years, 10 years.
Forever.
I've been around so long that you've seen my hair turn gray. My wife won't let me leave the business. But the point is that there's going to be a huge attrition. So get to know your realtors, get to know people and understand where their mindset is. I'm not going anywhere. Every year we have, I want to say like 20% of the realtors leave the market because they just can't handle it. We have people that retire. We have people that move out. We have people that just get into it with, dollar signs in their eyes. And they're like, oh, I can do this. This is easy. Everybody can do it. And you realize it's not that easy because you have to know the numbers. You have to know the market. You have to be able to weather bad times. And, I've been through quite a few, and you've been through quite a few bad times. And this is where, it takes us to get together and work as a team and work with other people and understand the market and how to best navigate it. And if this is a good time, if you've been thinking about buying a house and you've been struggling to buy a house, this is an opportune time for you to do it simply because there is less competition in the market, right? And if you haven't seen this slide, because I haven't put it out there 100,000 times, now is the time because there's less people in the market, right? I just showed you we had 60 closes or 70 closes this week in San Jose compared to 144 from last year, same week, right? We're down 50%. This is the time to go and find houses and get great deals. I just showed you this house right here where this house listed at 1.18 and sold for $1 million. There's deals to be had, guys. Right?
Yeah, there's been a tremendous opportunity. We've definitely seen that over the last, almost 6 to 9 months, right? We're just, homes are sitting longer on the market. And for the first time in a long time, our buyers have the opportunity to negotiate, right? To negotiate their terms. And almost on every transaction in the last 6 months, we've gotten something, as part of the deal, like seller credits or a reduction in price or just something that was favorable for our buyers. So that was really kind of neat, right? It's been a really long time since buyers have been able to do that. and the few and the brave that, went out there in the cold and found a home, are really reaping the benefits of that.
Yeah. I mean, there's a long-term benefit, right? And we grew up with instant gratification and real estate. If you bought before and you had, $200,000 to throw down, great. You were in the market and you're reaping the benefits, right? But if you're entering the market or thinking about entering the market, there's a lot of opportunity here for you guys. A lot. So the next thing is apartment rent growth set to keep slowing this year. Now, that's an important thing if you are an investor or you're thinking about being an investor, because what's going on with rent growth? Well, growth, it means that most of the apartments are filled up, right? There's just not enough housing being built right now to do that, to fulfill the need of the growing population. Right? There's that, but also sales are slowing, but also people are deciding to move back home. If you're going to get laid off and you happen to have a support system where you are, you're going to move back home and what have you. So is this a good opportune time to buy into investment REITs or real estate investment trusts? I think so, because we're still seeing people start major projects. We're still seeing companies start major developments within not just apartment, but homes and duplexes and multi-unit building, whatever. Help me here.
Multi-unit properties, yeah.
Multi-unit projects, and they're increasing that, but it takes time. Now, I don't know if you know, but almost every metropolitan area in the U.S. right now has slow down in inspections and permits and all that other stuff, mostly because they're still playing catch up on hiring people back or bringing people back to be the inspectors, to be the permit people, right? I don't know if you know, but like on Snell and Santa Teresa, right down the street, we have that 7-Eleven that's being put in, and it's been going on almost 18 months now.
It's on Cottle
and Santa Teresa, yeah, right down the street. Right? I see it every day because I go to the gym and I see it there every day, and they're stalled. Why?
Yeah,
not because of contractors.
Right? I know there's a lot of that goes in with the kind of environmental regulations with gas stations and
But I mean, we have a house on Curry that's been in construction. Now, I understand the first part of it was waiting for the insurance companies to pay for it. The house burnt down, which happens, right? It sucks for them. But it's been in a building mode for, I want to say, 2 or 3 years. And it's just sitting there waiting for the inspectors to come by. And it's the same story over and over again. We're waiting for the inspectors. The contractors are waiting for the inspectors. And that's why we're having issues with that. And it's not that they're not trying. It's just it's hard to hire people through the city. It takes 6 to 8 months to hire somebody.
Oh, that's nuts.
Just the way it is.
Hey, Vito, I appreciate you having me on. I've got a break right now, right before 9 o'clock. Great to see you coming on. Let's do this perhaps later this week. Let me know
whenever you're ready.
An opportunity. Thank you so much for having me. Have a great day.
Bud. See you. Bye. Get out of here. I'll kick you out. I'm going to kick you out. All right. So last thing is financial intelligence. Now, financial intelligence is something that we don't grow up with, right? Unless you have amazing parents and they teach you everything about home finance, investing, buying real estate, understanding health insurance, understanding trusts, understanding taxes. You just can't know it all. You just can't. I mean, you just don't. It's not possible for you to know that. And it's not possible for me to know all of that. I know little bits and pieces, just like why I bring Hector on. I bring trust people on. I bring everybody on. Next week, I'm trying to bring on somebody that does healthcare, and he sells healthcare to companies so that you as an employee can have healthcare. It's not to try to sell you anything. It's more to understand what happens if, what questions should you be asking? What questions, how can I best arm myself and find not the best insurance, but how can I work through the payment of, like say I had a broken arm and it cost me $5,000, $10,000. Well, okay, Great. How am I going to work through that? He's going to help you understand what you can do. There's certain things you can do. There's certain things that he can help you with, or your person can do, right? And we have other people that help with commercial lending and business banking and all sorts of stuff. So sit tight. If you're interested in learning more about financial intelligence and becoming a micro investor all the way to a major mogul, let me know. I'm Vito Scarnecchia with Abitano. We'll see you out there.